Hello everyone, my name is Dan and I decided to record a very insightful video for you all today because in this one I will go over the most important ICT concept, so if that sounds interesting, you better stick till the end to get the most value out of it. Alright, so as stated, today I will go in depth covering the fair value gap, which I think is the most important ICT concept. The fair value gap is a concept I use on a daily basis. It is a very popular concept that I see a lot of people struggling with. And because of that, and also because recently I received a lot of requests, a lot of messages from people asking me to do a video covering these fair value gaps, to do my best to clarify everything for them, I decided to sit down today and do it. So here it is. Let's jump right into it. First of all, when do these fair value gaps occur? These fair value gaps occur when big volumes enter the market. Okay, this is the first thing I wanted to let you know. Okay, this is like a short definition of fair value gaps. We know that fair value gaps occur when big volumes enter the market and push the market, push the price either to the up or to the downside. All right. Secondly, how can we use these fair value gaps? Well, we can use these fair value gaps in order to determine areas of interest or to identify the overall bias. Okay, and we get into that a bit later. Okay, we are going to take it step by step, and after that, we'll also going to go over some examples. I'll also use the bar replay to identify fair value gaps in real time, because like this, I truly think that you'll get a much better understanding on how to identify these. Because to be fair, it's not that hard. I see a lot of people struggling with it, but it really ain't that hard. Okay, and I will also go over some few mistakes I see a lot of people make when they try to identify these fair value gaps. Okay, so we know that we can have two fair value gaps. We can have a bullish fair value gap or we can have a bearish fair value gap. Let's start off with the bullish one. Well, to identify a bullish fair value gap, we need a 3 candlesticks formation. That can be a random candlesticks formation, of course. And it forms when the high of the first candle does not overlap with the low of the third candle. Okay, and now let's just go on this chart and look for a random example. Okay, so we have an example right here. This one is clear as day. We have a, like I said, we need to pick a 3 candlestick formation. This bearish candle right here, okay, is the first candlestick of the formation. This huge bullish candle right here is the second one, and the third one is this bullish candle right here. Okay, so let's quickly mark the high of the first candle. Okay, and let's quickly mark the low of the third candle of our formation, which is this one right here. So we can clearly see, as stated in our rules, that the high of the first candle doesn't overlap with the low of the third candle. So this right here is a bullish fair value gap. Okay, this right here is a bullish fair value gap. It is that simple. Okay, so now let's go over the bearish fair value gap. Okay, and after that I will go over some mistakes that I see a lot of people do, and after that we'll gonna do some live bar replay backtesting, identifying some fair value gaps together. Okay, so the bearish fair value gap forms when the low of the first candle out of our 3 candlestick formation doesn't overlap with the high of the third candle. Okay, so let me quickly find a example right here. Okay, perfect. We found an example right here. We have a 3 candlestick formation. Look, this is the first candle right here. Okay, let me quickly, oh, sorry, this is the first candle. Okay, this right here is the second candle. All right, and the third candle is this bullish candle right here. Okay, this is our 3 candlestick formation for this example. All right, so we need to mark the low of the first candle, which is this one right here. Okay, and then we need to mark the high of the third candle, which is this one right here. All right, and we can see that they aren't overlapping. All right, so because of that, this right here is a bearish fair value gap. Okay, This right here is a bearish fair value gap. All right, this is a valid bearish fair value gap right here. And as y'all can see, it's not really hard to identify them. Okay, and like I said, when do fair value gaps occur? When big volumes enter the market. And right here we can see that some big bearish volumes enter the market and push the price lower. All right, that's exactly when fair value gaps occur. And secondly, we can identify the bias. Okay, let's quickly enable the bar replay. Right, if let's say we open the chart and the chart looks like this, right? We see this huge fair value gap right here, and as a bias, we will definitely be bearish. Okay, if we see this huge bearish momentum, and if we see this huge fair value gap, we can definitely establish a bearish bias, right? So that's why it is so helpful. All right, and of course we are going to get into the areas of interest as well a bit later in this video. Okay, so make sure to stick till the end, and of course make sure you are subscribed if you enjoy this type of content. All right, okay. So now, like I said, let's get into some examples. But before we do that, I actually wanna go over some mistakes I see a lot of people make. So the first mistake I see people make is the one where they only count the bodies. Okay, so in this example right here, let me show you. I see some people do this. Let me use the bar replay for this example. It's going to be easier. Okay, boom. All right, so right here, we have these 3 consecutive bullish candles in a row. We have a 3 candlestick confirmation. What I see a lot of people do, which is a mistake, is they don't count the wicks. They count the body of the candle, and they would say, okay, this is my high of the first candle, and this is my low of the third candle, which is this one right here. And they say that, okay, I have a fair value gap here, which is wrong. Because you have to take the wicks in consideration as well. And in this case, we can see that the high of the first candle is actually here, and the low is here. So there's no fair value gap. All right, so this is a mistake. This is the most common mistake I see people make when they try to identify these fair value gaps. Okay, yes, there is some bullish momentum here, okay, but this is not a fair value gap. Okay, this is definitely the most common mistake I see people make when trying to identify these these fair value gaps. Okay, so now let's actually get into some bar replay backtesting, identifying some fair value gaps together, because I truly think that this way it's going to be a lot easier for you to understand it, to fully understand it, and get the grasp of it. And of course, after this video, I highly recommend you to go ahead on a random chart. Doesn't really matter what pair you choose or what time frame. You can identify fair value gaps on every single pair or every single time frame. Go ahead and train your eye, because it is very important. Before you actually starting to implement the fair value gaps in your strategy or trading plan, you have to fully master them. Okay, so before that, make sure you do your chart time. Okay, and also before we get into this live backtest, if y'all want to see the SMC trades I am taking on a daily basis, you should check my SMC trading group. It is the first link down below. Feel free to join it. Okay, so right here, I already see a fair value gap. Okay, so we have a 3 candlestick formation here. Okay, these 3 bullish candles. Check this out. This is the high of the first candle. Okay, and this is the low of the third consecutive candle. So right here, we have a bullish fair value gap. Okay, right here. All right, so now we can quickly delete these orders, these drawings. Okay, and continue with the bar replay for some more examples. Okay, we have another fair value gap. All right, where is it? It is right here. Look, this is the low. This is a bearish fair value gap. Okay, this is the low of the first candle, and this is the high of the third candle. As we can see, they aren't overlapping. So right here, we have a fair value gap. Okay, right here we have a fair value gap. And we can see once again how we can establish the bias. Because if we open the chart and we see this, okay, we see this fair value gap and this huge momentum to the downside, we can definitely establish a bearish bias, okay, right from the get-go. So let's continue. Once again, we identified another fair value gap from this, the low of this candle doesn't overlap with the high of this candle right here. So this is another valid fair value gap. Okay, let's play the price forward. No fair value gap here. Okay, once again, do not mistake to consider this a fair value gap, to say, oh, look, the low of this bullish candle is right here and the high is this body right here. No, you have to count the wicks as well. Okay, so this right here won't be a fair value gap. Okay, let's continue. Okay, we formed another one. Check this out. The high of this first candle doesn't overlap with the low of the third candle. So we have a fair value gap sitting right here. Okay, let's continue with some few more examples. Let's quickly clear the charts because it's getting too messy and we don't want to have trouble identifying these fair value gaps. Okay, and okay, we formed another one. Check this out right here. The high of this candle doesn't overlap with the low of the third candle. Okay, another fair value gap right here. Boom. Okay, next up, we also had a fair value gap right here, right? Let me quickly do this. Check this out. The high of this candle right here doesn't overlap with the low of this third candle. So we have a fair value gap right here. Okay. And we can see that price had a pretty nice rejection to it. Okay, so lastly, let's just identify a final bearish fair value gap. And we will end our short backtest. But of course, if there's any questions, make sure to let me know down below. Okay, I just want to make sure that after this video, you have it clear and you will be able to identify fair value gaps with ease. So right here, once again, first candle, second candle, third candle. Okay, we can see we have the low of the first candle right here. Okay, and the high of the third candle right here. Do they overlap? No. Then we have a valid bearish fair value gap. Okay, so yeah, it's really easy. It's really easy. I'm not gonna lie. It's only about getting used to it. So like I said, I would highly recommend after you watch this video to go on a random chart and start training your eye. And trust me, in no time you'll be able to master them. Okay, and let's quickly delete these ones here as well. Okay, alrighty. So I will also show you all how I personally like to use fair value gaps now. Okay, so let me use the bar replay for this one. So right here, this is a trade from yesterday that I took and I also sent in my SMC group. Right here, what can we see? If we open the chart and we see the price like this, we can see based on fair value gaps that we have a bearish bias. Why? Because look, check this out. The low of this candle, of this first candle in our three candlestick formation, doesn't overlap with the high of the third consecutive candle. So right here, we have a fair value gap. Okay, after I identified the fair value gap, okay, I then told myself, okay, based on this fair value gap, and also based on this shift in momentum, by shift in momentum, I mean this liquidity sweep, followed by this impulsive break to the downside that formed this fair value gap. Knowing this, I said to myself, okay, let me look for a valid supply level to place a sell limit on. And I found this supply level right here. Okay, as we can see, it also has imbalance on it. And I placed the sell limit on it. I sent the trade in my SMC group. I'll also attach a picture on the screen right now to see exactly when the trade was sent. And the rest was history. Okay, so let's play the price and see how this trade played out in case y'all didn't already see. And this is where it triggered, and then we can use the bar replay. And yeah, it was a bit slow, but then it smashed all the targets. And of course, I'll attach a picture on the screen right now to see exactly when the trade hit all the targets, when I updated that the trade hit all the targets in my SMC group. And yeah, like I said, in my opinion, this is definitely the most important concept that I personally use as well on a daily basis. Okay, so it is definitely important to understand it and apply it correctly, because like I said, I still see a lot of people not fully understanding how to identify these fair value gaps. But I hope that this video made it a lot clearer for you. And if it did, let me know down below. A feedback will be a very much appreciated. All right, so once again, to quickly recap, we either have a bullish fair value gap or a bearish fair value gap. We have three candlesticks formation for both. The bullish one forms when the high of the first candle doesn't overlap with the low of the third candle, and the bearish one forms when the low of the first candle doesn't overlap with the high of the third candle. Keynotes: fair value gaps can be used in order to determine areas of interest, as I did here, okay, or to identify the overall bias. And secondly, they occur when big volumes enter the markets, as we can see here. Okay, we can see that when this fair value gap occurred, it was clear as day that some bearish volumes entered the markets. Okay, and definitely that was the case because it had a beautiful reaction to this zone, and then price went even lower. So you can see how identifying this fair value gap helped me identify this trade and have some nice profits with it. Okay, so yeah, on that note, please let me know down below if there's still any questions or unclarities on this topic. Of course, feel free to also share and like the video. That will be very much appreciated. And till next time, a very cool ICT strategy will pop on the screen right now. It is the silver bullet trading strategy. You should definitely go ahead and check it out. It is a very simple strategy that requires a minimal amount of time and can give you some decent results. Okay, and lastly, I want to wish you all the best and take care.